I'm here with Scott Dingle, Investment Manager at Spire Capital. Scott, thanks for speaking at the Inside Network's Equities and Growth Asset Symposium.
Thanks for having me.
The tagline for this event is Sailing Through the Headwinds. In your opinion, how should advisors try to achieve this?
Look, at Spire, we think that advisors and clients can sail through the headwinds with a little bit of exposure to private markets. We think private markets actually provide some diversification benefits for many clients' portfolios. Not a lot of people know this, but in the US, 87% of businesses with revenues over $100 million are actually privately owned. So that's a large opportunity set that you're not just getting through the public markets. Secondly, we think private markets provide some downside protection. So if you look back over the last 30 years or so, and you look for the 5 years with the worst performance on the private market side, plus 2.1% would have got you to the 5 years to Q1 2003. If you look at the public market, so it's the listed equity side, that would have been a negative 5.7. So we believe that the private markets can help you be a little bit protected from big downturns.
Now, private assets are receiving a wave of interest and capital, for that matter. What should advisors bear in mind as they enter the asset class?
Yeah, look, I think there's a number of considerations advisors should make when they're looking at the private markets asset classes. These sit in sort of investment considerations, but also business considerations. So on the business side, you've got to think about things with compliance, how it works on platforms, how scalable is it, clients' suitability. On the investment side, there's a large number of factors. We've actually put out an investment guide called Surfing the Wave, Avoiding the Reef, that deals with those sort of key 10 areas that we think people should consider. Of particular note, we think liquidity is very relevant, as is valuations, and then also specialisation.
Okay. Presumably, conducting research into a series of bespoke offerings is quite complex. How do you suggest a practice narrows down the range of opportunities that are open to them?
Yeah, look, that's a great question. I think one of the key things we're encouraging people to do with private markets is to take a portfolio approach. So we're yet to have found the perfect private markets fund. So people need to be really clear about what they're looking for. Are they looking for low fees, high returns, low volatility, diversification? I think once you've defined that, then I think it's time to sort of start digging deeper into those managers. But defining what you're really looking for to come from your private markets part of the portfolio is super important before you start diligencing these managers.
Well, in the interest of finding what we're looking for, what questions should the wealth management community be asking fund managers that they aren't immediately asking?
Yeah, look, if we dig into those 3 of the sort of 10 investment areas that we are getting advisors to think about, and we start with liquidity, I think, look, there's the obvious things that fund advisors should be asking fund managers about around locks and gates and how the mechanism works. But we actually think a really good question to ask is who's investing in these funds and how have they acted in the past? Really interesting period to look at is that sort of March 2020 quarter when COVID hit. The world was ending and everyone was running for the exits. And I think you can see big disparities between how people behaved in certain funds and certain investor bases. The other thing we keen for people to understand is really on the valuation side. So we really encourage advisors to understand how the assets are valued in these funds. These semi-liquid funds, you're coming in at a NAV that's set by the manager. And so you really want to understand how they're landing on those valuations.
And what do you think the biggest surprise could be for markets in 2024, Scott?
Look, I'm not one for making predictions. I sort of, I'll leave that to the economists and others. But I think, look, potentially there's the opportunity for some bank consolidation in the US, in the regional banks. I think that corporate real estate distress and stress that we're seeing over there is yet to play out or is continuing to play out. And I think there may be some regional banks that come under pressure there. What that means for private markets is I think it gives an opportunity for some of the private lenders to step into the space that those banks might be leaving.
Scott Dingle, thanks for joining us.
Thank you very much.